Hi, this is James Shug at Westpac with the end of day report for Thursday, July the 12th. And a significant down day today actually, with European markets especially weak. We saw the reaction today on the Spanish stock market that we should have seen yesterday following the austerity budget that was announced by the government. The Spanish market down 2.9% just heading into the close. And other European markets off quite steeply as well, with the FTSE in London down 1%, led by commodity producers, BHP, Rio Tinto, down between 2 and 4% apiece. The French market down 0.75%, the German market down 0.7%, and the Italian market down more than 2% today. The reason for that? Just one thing really, it was the reaction to the Fed minutes to the FOMC meeting from January 1920. They came out at 7 p.m. London time last night after the European close and basically showed that although two members of the committee supported the idea of probable further stimulus, balance sheet expansion, the majority either wanted to see further evidence of weakness before going down that path, or in one case there was a dissenter who actually thought interest rates still needed to go up before the end of 2014. So there wasn't enough in the minutes to suggest that QE3, balance sheet funded monetary policy stimulus, would be imminently forthcoming. Now we've got Ben Bernanke testifying to Congress next week as part of his twice yearly monetary policy report to Congress. Then we've got the GDP figures for the second quarter on the 27th of July, which include the annual revisions based on more accurate source data that last year in July saw a significant downward revision to the prior growth profile. If Bernanke perhaps next week were to signal or hint that maybe they are inching towards being inclined towards doing further stimulus, and then we saw the growth profile revised down in the following week, then maybe QE3 is still possible as soon as the August 1 announcement date. Otherwise it mightn't come through until the mid-September meeting. But our view at Westpac is going to happen at some point in this quarter. It's just that today European markets are digesting the disappointment that there wasn't some firmer signal of it in those minutes. That was why US markets were weaker a bit last night, and indeed why US markets have continued to sell off today. We saw the Dow, at lunchtime in the US, the Dow's down 0.5%, S&P 500 is down almost 1%, and tech stocks are down, let's see, 1.3% at the moment. Earnings guidance has tended to be softer. Analysts are downgrading their expectations for the performance of firms over the next half year because they're downgrading their growth expectations. And they're doing that because of the weak run of data that we've had, and because official bodies too have been suggesting that risks are intensifying, and that, well, for example, the IMF on Monday is going to downgrade its global growth view. We had some industrial production figures in Europe. They showed a 0.6% rise in May, but the annual pace of decline, a 2.8% year contraction, that was steeper than at any point in the first two quarters of the recession in 2008. So yet more evidence that even though there was a rise in the month, that Europe is in recession. We had US initial jobless claims figures. These are the weekly numbers that tell you how many people are being laid off. They actually fell from 376,000 to 350,000, but they did that because of the auto sector not shutting down its plant for the summer break and for new model retooling for quite as long as they do typically, and so trying to seasonally adjust for that does tend to push the numbers around a bit. The BLS, the Bureau of Labour statistician, said that they expected that distortion to gradually correct in the next few weeks. So there was no evidence there of actually an improving labour market coming through. Look, that's about it really. Markets are now focused on the Chinese GDP numbers, which come out at about, I think it's about 3 o'clock in the morning London time, so what's that, midday in Australia. There's no Aussie data of note coming out Friday, but that's the next big thing. Our view at Westpac is that we'll see the annual growth rate at 7.3%, which is right at the bottom end of the range of market forecasts. So we expect it to be a disappointing result, and if we're right, expect to see more of the same. Okay, that's it for today. I'll be back tomorrow, but first I should mention commodities in the Aussie dollar, and they're down. So copper's down 1.2%, gold's down 1.1% at $1,558 an ounce, and oil down just over 1% as well at $84.90 a barrel. And the Aussie dollar is at 1.012 against the US dollar, so down about a cent compared to yesterday. We had weak Aussie jobs numbers yesterday, and the global growth concerns and risk aversion trades being put on today, the main factors pushing the Aussie down. Okay, that's it for today. Back tomorrow.